And despite Target's drop today, our next guest says the stock is more likely to hit $200 this year, around 70% above current levels, than fall below $100 a share. It's at $116 at the moment. Let's bring in Stacey Wilditz, president of SW Retail Advisors. That's a punchy call on a day when we're slipping so much. So talk us through why you're so confident they're going to recover from here.
It is, and Paul just pointed out that I'm actually dressed like a bullseye, so I did not put that together today. But, you know, Will, it was funny, a couple years ago I was on with you and I was arguing that there was this 7 multiple spread between Walmart and Target because Walmart started its investment phase much earlier than Target, so it kind of went through the turnaround and came out the other side and got this huge multiple. Target started their investment phase 2 years later, and now they're really just starting to come out the other side. So you look at the multiples now and say Target's a 17, Walmart's a 22. I would argue that Target should be at least what Walmart's multiple is, if you see what they're doing, particularly with the store renovations and the fulfillment options.
I guess the market had come around to that fact that Target was playing catch up to where Walmart was, and it had such a good run for that. So are you saying that today's miss doesn't derail that thesis? It's just a sort of one-off? Absolutely
not. And I think, yes, that it was a disappointing number, but their comps on a 2-year basis are still more than 7%. Their traffic is still positive. Who has positive traffic in retail? Big box stores? Nobody. I mean, except Target and Walmart has a mix of ticket. So I think they command a multiple that's a standout.
Okay, but when you're looking at where they missed on electronics and on toys in the holiday season, Target says it doesn't really know what's going on. Do you?
So let's break that down. So toys was flat, right? So last year we had these phenomenal toy numbers because the year before Toys R Us went bankrupt. So they got this huge share gain in the door. So, okay, let's put that one aside. Consumer electronics, by the way, which is a low margin business, that decelerated significantly. So we could argue that Best Buy is doing a better and better job and continuing to gain market share. We can also argue that perhaps with the fear of tariffs, there was some pull forward sales into this summer, which is something I argued a while back that actually the fast money guys laughed at me about. So here we are.
Now, you mentioned tariffs, so this trade deal today. Obviously, these big retailers have been able to negotiate with suppliers. How much of that do you think is going to stick, even if these tariffs do roll back?
So that's the fantastic thing. Well, this whole trade thing has not been fantastic for anybody, but in the long term, what has happened, the big guys that are getting stronger and stronger are squishing the little guys. They're also going back to their vendors and saying, you got to play ball with us. So they've squeezed them. And as tariffs are removed, if they are removed, they have lower cost of goods and they've edged up pricing already. So margins are going to expand, perhaps, even in consumer electronics.